Assalamualaikum warahmatullahi wabarakatuh. The Honorable Mrs. Nikmatunia as the lecturer of these courses, this research methodology courses, and before I start the presentation, I would like to introduce myself. My name is Isfira Hanifa Adhelya from Accounting 3F. For today agenda, I will explain about the calculation of Article 21 income tax for permanent employees of ADH JAYA LLC. The first is table of contents. The first is background, second is problem formulation, the third is objective, and next is benefit, and the fifth is literature review, and the last is research methods. Okay, for the first one is background. Along with the development of tax regulations, the Indonesian government has introduced a new method for calculating Article 21 income tax, namely the average effective rate, or we can call it TER. The TER is designed to provide a more accurate and straightforward tax calculation approach. This method calculates tax based on annual gross income, then proportionally distributes the tax burden every month. With this approach, the risk of over or under monthly tax deduction can be minimized, providing benefits for both employees and the company. ADH JAYA LLC, a company operating in the trading sector, has a significant number of permanent employees. As an employer, ADH JAYA LLC is responsible for ensuring that the calculation, deduction, and reporting of Article 21 income tax are accurately conducted in compliance with the latest regulation. The implementation of the TER rate presents how the implementations of the TER rate presents new challenges for the company, such as adjustments to payroll systems, training of financial staff, and oversight of tax administration compliance. In addition, the implementation of the TER rate also has a direct impact on employees' net income. Transparency in tax calculations is crucial to maintaining trust between the company and its employees. In this case, ADH JAYA LLC need to ensure that every calculation process is conducted accurately and in accordance with applicable regulations. Based on this background, Based on this background, this study aims to examine the process of calculating Article 21 income tax for permanent employees at ADH JAYA LLC, using the average effective rate, or TER, as regulated in Government Regulation Number 58 of 2023. And this study will assess the accuracy of tax calculation and compare the result of tax calculation using the average effective rate with those using the Article 17 income tax rates stipulated in Law Number 36 of 2008. The findings of this study are expected to provide valuable recommendations for ADH JAYA LLC in optimizing the management of tax obligations and ensuring compliance with applicable tax regulations. The next is problem formulation. Number 1. How is the calculation of Article 21 income tax for permanent employees at ADH JAYA LLC conducted using the average effective rate or TER regulations stipulated in Government Regulation number 58 of 2023. Number 2 is how is the calculation of Article 21 income tax for permanent employees at ADH JAYA LLC conducted using the tax rate under Law Number 36 of 2008. And the last is what is the comparison? The last is what is the comparison between tax calculation results using the average effective rate or TER and those using the tax rate stipulated in Law Number 36 of 2008. The next one, objectives. The objectives of this study is to determine the objectives of this study are to determine the process of calculating Article 21 income tax for permanent employees at ADH JAYA LLC using the average effective rate or TER. The next objective is to assess the accuracy of tax calculations for permanent employees using the average effective rate or TER method. The last objective is to compare the tax calculation results for permanent employees using the average effective rate or TER with those using the Article 17 income tax rates as stipulated in Law Number 36 of 2008. The next is benefits. The benefits of this study. There are 3 benefits of this study. The first is this research is expected to contribute to the development of accounting knowledge, particularly in the field of taxation. The second is this result is expected to provide suggestions and input for ADH JAYA LLC in the process of tax calculation for permanent employees. The last benefit is this research expected to serve as a reference for future researchers. Move to the next slide is literature review. For the first is the definition of taxes. Pursuant to Law Number 28 of 2007, a tax is a mandatory levy imposed by the state upon individuals or entities by virtue of law without any corresponding direct benefit and is utilized for public purposes to secure the greatest good for the greatest number. The next is the functions of the taxes. According to Madiasmo 2009, number 4, the function of taxation can be categorized as follows, which are budgetary function. Taxes serve as a primary source of revenue for the government to finance its expenditures. The second is regulatory function. Taxes this function as a tool for the government to implement and regulate social and economic policies. stabilization function through taxation. The government has the funds to implement politics. The government has the funds to implement policies related to price stability, thereby controlling inflation. This can be achieved, among other things, by regulating the money supply, tax collection, and the effective and efficient use of tax revenue. The last function is income redistribution function tax. Revenue collected by the government is used to finance public interest, including development projects, which in turn create job opportunities and ultimately increase people's income. The principle of tax collection. The principle of tax collection are divided into three main categories. The first is domicile principle. The domicile principle asserts that a country has the right to impose taxes on all. The principle of tax collection are divided into three main categories. According to Ratnawati, there are three categories. The first is domicile principle. According to Ratnawati and Hermawati 2005, the domicile principle asserts that a country has the right to impose taxes on all income of taxpayers residing within its territory, regardless of whether the income is sourced domestically or internationally, and a taxpayer who is domiciled or resides within the territory of Indonesia is subject to tax on all income derived from both Indonesia and foreign sources. The second is source principle. According to Mardiasmon 2006, the source principle states that a country has the right to impose taxes on income that has its sources within its territory, regardless of the taxpayer's place of residence. And the last principles is nationality principle. According to Sumarsan 2005, under the nationality principle, the basis for taxation is the citizenship of the person or entity earning the income. In this principle, the source of income is not considered. The next is tax collection procedure. Tax collection procedure. According to Madiasmo 2019, there are several tax collection systems, which are: the first is official assessment system. The official assessment system is a tax collection method that grants the government or tax authority the authority to determine the amount of tax owed by taxpayer. The second is self-assessment system. The self-assessment system is a tax collection method that empowers taxpayers to determine their own tax liabilities. The last collection procedure is withholding system. The withholding system is a tax collection method that grants a third party, neither the tax authority nor the taxpayer in question, the authority to withhold or collect taxes owed by a taxpayer. In the next slide, I will explain about income taxes. Pursuant to Article 1 of Law Number 17 of 2000, personal income tax, or we often call it PPh, is a tax assessment imposed on individuals or entities on their taxable income for a given tax period. A taxpayer is any individual or entity that is subject to income tax or income accrued or derived. The objective of income tax is income. Income is we can define income as any increases in economic benefits during an accounting period arising from the ordinary activities of an entity and from incidental transactions that result in an increase in equity, other than those arising from contribution from equity holders. In this slide, I will explain about Income Tax Article 21. The definition of Income Tax Article 21 according to SARI 2014. Article 21 Income tax is a personal income tax withheld by employers on remuneration in the form of wages, salaries, allowance, honoraria, awards, or similar payment made to domestic individual in connection with employment, services, or other activities performed by such individuals. The payment of Income Tax Article 21 under the payment rule for Income Tax Article 21 under PMK number 231 PMK.03/2019 concerning procedures for registration and deletion of taxpayer identification numbers, establishment and revocation of the establishment of taxable businesses, as well as withholding, collection, payment, and reporting of tax for government agencies. The deadline for submitting monthly tax returns is stipulated. Central and regional government agencies must remit Article 21 income tax within 7 days after payment using the advance fund mechanism or on the same day of payment using the direct payment mechanism. The reporting rule for income tax Article 21 according to PMK under PMK number 231/PMK.03/2019 concerning procedures for registration and deletion of taxpayer identification numbers, establishment and revocation of the establishment of taxable businesses, as well as withholding, collection, payment, and reporting of taxes for government agencies. Moreover, government agencies must submit monthly tax returns within 20 days after the end of the tax period, except for value-added tax, monthly tax returns for taxable government agencies, which must be submitted by the end of the following month after the tax period. The tax rate of Income Tax Article 21. According to UU 2012, tax rate can be categorized into 4 types. The first is proportional rate, which a rate with a fixed percentage that is influenced by the amount of tax imposed. The second is fixed rate, which is a rate with a fixed amount of tax that is not influenced by the amount of be taxed. A fixed rate, which is a rate with a fixed amount of tax that is not influenced by the amount of be taxed. The last categories is progressive rate, which is a rate whose the last categories is progressive rate, which is a rate whose percentage increases as the taxable amount increases. This is commonly used for Article 21 income tax, where the rate is determined based on Article 17 of the income tax law. This is the tax rate of income tax Article 21 according to the law number 36 of 2008 in Article 17 as shown in the slide. Okay, and the next is data classification. For this research, type data by natures. The first is quantitative data. This type of data deals with numerical values and measurement. It focuses on quantifying and analyzing numerical relationships. In this study, it includes the number of transactions, the value of the tax withheld, and the applicable tax rate. And the second is qualitative data. This type of data deals with characteristic attributes or qualities that cannot be easily measured or qualities that cannot be easily measured. Qualitative data, this type of data deals with characteristic attributes or qualities that cannot be easily measured or quantified. In this study, tax reporting procedures and internal policies related to the management of income tax Article 21 are discussed. The next is data classification based on source. The first is primary data. In the study, primary data was obtained through interview with the financial staff of ADH JAYA LLC and direct observation of the tax calculation and reporting process. The secondary data used include company financial documents. Secondary data used includes company financial documents, applicable tax regulations, and literature related to income tax Article 21. And the last explanation is data collection method. Documentation is carried out by collecting and studying related documents such as financial statements, tax withholding evidence, and other tax documents related to income tax Article 21 at ADH JAYA LLC. Okay, and the next method is interviews were conducted with related parties such as financial staff, accountants, and tax manager of ADH JAYA LLC to get in-depth information about the practice of calculating and reporting income tax. And the last method is observation was carried out to see firsthand the process of calculating and reporting income tax Article 21 at ADH JAYA LLC. Okay, thank you for the attention. That's all for me. That's all my presentation and my explanation. Thank you.